Welcome back to Risk to Reward, the place where smart money meets smart tech. Today we're breaking down SentinelOne, a $20 cybersecurity stock using AI to protect everything from your laptop to federal infrastructure. It's growing fast, but can it survive a battlefield filled with giants like Microsoft and CrowdStrike? Let's find out. SentinelOne is a cybersecurity firm specializing in autonomous endpoint protection. Its singularity on-platform uses machine learning to detect and stop cyber threats in real time. No human required. It protects endpoints, cloud workloads, and user identities. The company's AI tech recently earned leader status in Gartner's 2024 Magic Quadrant, putting it toe-to-toe with Microsoft Defender and CrowdStrike Falcon. SentinelOne has several strengths. It partners with CISA Cybersecurity and Infrastructure Security Agency and earned FedRAMP High authorization in 2025, allowing it to handle the most sensitive U.S. federal data. Lenovo now pre-installs SentinelOne software on its new piece, giving them access to tens of millions of endpoints globally. Their new tool, Purple AI, acts as a digital analyst, autonomously investigating threats and accelerating response. Pair that with Singularity Data Lake, and you've got a platform that unifies all security data across endpoints and cloud, something even top-tier competitors are racing to match. In 2024 ITRE, ATT, and CK evaluations, SentinelOne scored 100% threat detection, outperforming even CrowdStrike in some categories. Their engine is fast, precise, and built for automation. By early 2025, SentinelOne had over 14,000 customers and grew its annual recurring revenue ARR to $920 million, up 27% year over year. They're on track to cross $1 billion in ARR within months. With $1.1 billion in cash and investments, no debt, and positive free cash flow in fiscal year 2025, they've got runway for growth, R&D, and acquisitions. That said, competition is fierce. Microsoft owns 40% of the endpoint market, CrowdStrike has 14%, and SentinelOne remains in the single digits. In 2023, the company had to restate ARR due to a miscalculation, laid off 5% of staff, and even explored a potential sale. While they've bounced back, those scars linger. Profitability is improving, but they still run a GAAP net loss margin of minus 35%, better than the minus 55% last year, but still a long way to go. FY26 guidance calls for around 22% growth, with projected revenue of $1.01 billion and $228 million for Q1, slightly below analyst expectations. Financially, SentinelOne brought in $821.5 million in revenue for FY25, up 32% year over year, and $225.5 million in Q4. ARR hit $920 million, and adjusted EPS came in at 5 cents profit, their first non-GAAP positive quarter. Free cash flow is slightly positive. Gross margins held around 77%, and they finished with $1.1 billion in cash and no debt. What this shows, SentinelOne is scaling efficiently. Revenue and ARR are growing fast, losses are narrowing, and free cash flow has turned positive, all signs of maturing fundamentals. With strong margins and a clean balance sheet, the company is positioned to keep growing without financial strain. The street leans bullish, with an average price target between $25 to $26, 20 to 30% upside from here. Piper Sandler has a $32 target, citing Purple AI's potential to steal share from CrowdStrike. Morgan Stanley calls it undervalued, trading at a 50% discount to peers on a growth-adjusted basis. Bears see risk too. Low-end price targets hover around $18, citing competition and slowing security budgets. In conclusion, SentinelOne is packed with upside, bleeding-edge AI, major government and enterprise deals, and a fast path to profitability. But in cybersecurity, you've got to execute flawlessly. If they stay on track, this stock could re-rate hard. Smash that like, subscribe to Risk to Reward, and let us know, is SentinelOne the one for your portfolio?